Hi, Jim Gore from Thor Wealth Management. I'm going to do a follow-up from my last market update where we mentioned that the emerging markets should outperform over the next several years for two reasons. One is that the US dollar is going to depreciate versus other currencies. And secondly, is that they are selling at a much cheaper price. Well, and the question then comes up, well, okay, if I'm going to invest in emerging markets, how should I invest in that space? Well, there's a lot of things that have happened in the last several years in the United States, and a lot of people think indexing is the way to go. However, in emerging markets, you can do much better by having an active investment manager. And the reason for that, if you first of all look at those markets themselves. So you look at, China, the A shares, Taiwan, and South Korea, just to name three countries, you can see that the people that are investing in those countries are basically retail investors, where in Japan and the United States and developed world, it is actually more institutional. Because you're dealing with retail investors, you have more of an opportunity, if you are a professional investor, to take advantage of retail investors making some emotional decisions. You can jump in there and make a lot more money. The next thing is, in the emerging markets, if you look at what is available out there, and we talked to some of our active managers, we just talked to one the other day, their space is over 4,000 stocks that they can invest in because they are buying smaller and mid-sized companies. But this is a Putnam study that looked at EM stocks that have over $3 million traded on a daily basis. And you can see that if you're just investing in the indexes, you're missing out on almost half of the available market, and that's in actively traded and more liquid stocks. And then you look at this chart here, a lot of the indexes that you're buying into for emerging markets have a lot of state-owned enterprises in them, whether they're Chinese bank, utilities down in in Latin America and so forth. And this chart shows here that over the last 10 years, state-owned enterprises have underperformed non-state-owned enterprises by over 6%. So having an active manager to us in this space offers us the opportunity to get better performance and better alpha investing with those managers. And particularly at this point, we like managers that are buying the small companies and mid-sized companies that are going to benefit from the rising consumer in India, in China, in Brazil. As they start getting more spendable money and cash, they're going to use that and buy things, and they're going to benefit from those investments. You're going to be much better off at this juncture investing with active managers in the emerging markets than you will investing in the indexes. Take care, and if you have any questions, as always, reach out to us and we'll answer any questions you have.